Hello, and thank you for joining the O'Hare Wealth Management Weekly Update for November 12th, 2025. I'm Jerry Jones, and I'd like to thank you for joining us. I also like to remind you that if you have questions that you would like us to consider on this call in the future, please send them to service@oharewealth.com, or you may text or call us at 414-644-0060. With that, let's jump into this week's question. I'm hearing more and more about alternative investments in the news. What role do they play in your overall investment philosophy? Well, it's definitely true. Investors across generations are increasingly turning to alternative assets. This shift reflects a broader desire for diversification, inflation hedging, and exposure to new growth areas. Why does diversification matter? Well, it reduces your overall portfolio risk. It enhances resilience during tough market downturns, and it also provides access to non correlated returns in emerging sectors. Let's see how this is playing out across the generations. As you'll note on the top of this screen, the shaded area in blue at the top reflects the alternative investments, which also include real estate and hedge funds, now making up about 20% of millennials' investment portfolios on average. That's significantly higher compared to alternative exposure among Gen X and baby boomers, which totaled about 11 and 6%, respectively. Several factors are pushing investors towards alternative: inflation concerns, market volatility, and the rise of digital platforms that make these assets more accessible. There's also a growing desire for investments that align with personal values and long-term trends. Some popular alternative assets that are not noted here are crypto, which offers decentralization and inflation resistance, private equity, which gives exposure to innovation and startup, and real estate, which provides tangible value and income. Alternatives work best when they complement, not replace traditional holdings. I'd like to state that again: when they complement your traditional holdings, not replace them. Investors can use fractional platforms to access private markets and real estate. The key is to match allocation with your risk tolerance and time horizon. And if we look at this screen again, you can see across the generations, as we noted earlier, millennials are increasing, but each generation is starting to dip their toe more and more into the alternative investment area. Now, some of the risks are illiquidity, volatility, and complexity. This requires due diligence and understanding of these mechanics of the alternative investment. So, what does that mean for you? Alternative assets are no longer a fringe. They are a strategic part of a diversified portfolio. With thoughtful allocation and risk management, they can enhance both resilience and returns. It's important to sit down with your advisor and make sure they understand your risk tolerance and time horizon, not only for your traditional portfolio, but specifically for alternative assets. That brings us to our book recommendation, 1493. This is also available to you on Goodreads, and I would encourage you to go out and take a look. There's also a video on this platform that will discuss it more in depth. With that, we'd like to thank you for joining us. And if you have any questions you want to submit, please don't hesitate to do so once again at service@oharewealth.com. On behalf of the rest of the team, my name is Jerry Jones. Let's cut that. On behalf of the O'Hare Wealth Management team, I'm Jerry Jones. Thank you for joining us today.